we are covering the most heavily tested health policy for the health insurance exam, major medical insurance. These policies are known for their broad coverage and high maximum limits, which is why the exam focuses on them so heavily. The key to passing questions on this topic is to master the cost-sharing provisions. Let's walk through an exam-style scenario. Imagine an insured has a major medical policy with a $1,000 calendar year deductible, an 80/20 coinsurance provision, and a $5,000 out-of-pocket maximum. The insured incurs a $20,000 hospital bill. First, the insured must pay their calendar year deductible, so they pay the first $1,000 of the bill. This leaves $19,000. Now the coinsurance kicks in. The insurer pays 80% and the insured pays 20%. 20% of $19,000 is $3,800. So the insured pays this amount. In total, the insured has paid the $1,000 deductible plus the $3,800 coinsurance for a total of $4,800. Because this amount is less than their $5,000 out-of-pocket maximum, this is their final responsibility for this claim. The insurer pays the rest. A common exam trap is to ask for the insurer's portion, not the insured's. Always double-check what the question is asking for. Now let's talk about the out-of-pocket maximum, which is also called the stop-loss provision on your exam. This is the absolute most an insured will pay for covered services in a year. If that same insured later has a second claim for $10,000 in the same year, how is it handled? The deductible is already met. So we move straight to coinsurance. The insured's 20% share would be $2,000. However, they have already paid $4,800 this year. Their out-of-pocket maximum is $5,000. This means they only have to pay $200 more before they hit their limit. After they pay that $200, the insurer covers 100% of all additional covered expenses for the rest of the year. Another critical concept is the corridor deductible. This only appears when a major medical policy is supplemental to a basic hospital plan. The basic plan pays first, up to its limit. Then the insured pays the corridor deductible out of pocket. After the corridor deductible is met, the major medical policy begins to pay, usually with its own coinsurance. Think of it as a corridor you must walk through to get from the basic plan's coverage to the major medical coverage. For a mental shortcut, remember the payment order: deductible first, then co-share, until you stop. This helps you recall that the insured pays the deductible first, then you share costs through coinsurance, until the insured's spending hits the stop-loss limit. Exam questions will test your ability to calculate these amounts from both the insured's and the insurer's perspective, so practicing these calculations is essential. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.